Hi there, this is Charles Kelly. I wanted to quickly jump on today, this afternoon, and tell you about some property news, and that is that 95% mortgages are back. They are now available thanks to a UK government guarantee scheme, which has been announced today. So they're actually available from today. You can go out and get a 95% mortgage, subject to affordability, of course. And the government has announced this scheme. It was originally announced in the budget, as you remember, but just the basic details are 95% mortgage guarantee launches today and available in most of the big high street lenders across the country. The scheme part of the range of ownership of options, including the many of the options for affordability for low affordable homes. And the new figures are showing demand for home ownership has soared during the lockdown, believe it or not. During this period of lockdown, the market has gone mad, with nearly 80% of private renters now saving for a deposit. So that's good news in that respect. But I know that the market has been going a little bit crazy. Now, the new government-backed mortgage guarantee scheme announced in the budget will help people to get on the property ladder with just a 5% deposit. And it's available from today, 19th of April, in case you listen to this in a few days' time. And the scheme will help both first-time buyers and existing homeowners to obtain a mortgage with a 95%, 5% deposit up to £600,000. And this is offering a route to home ownership for those people who haven't managed to save much of a deposit. Now, I'm putting full details of this on my blog, so I'm putting the link up here so you don't have to read it all here. But the government is essentially giving lenders a guarantee that they need to provide these high loan to value mortgages, and this will be based on a premium paid. And the scheme is now available with lenders such as Lloyds, Santander, Barclays, HSBC, NatWest, and Virgin Money will follow from next month. And they've made a pledge, the government, to build 300,000 new homes a year, and they're putting aside 12 billion for that. And this is to solve the high housing crisis. This is going to be the largest investment for many years, because there is a shortage of houses, and the market can go up or down, but the demand for housing will always sort of come back because there's a big shortage of housing. I think that's partly due to net migration over the past 15, 20 years, I guess. And then you've got more people seeking smaller units, maybe through divorce, and just people deciding to live on their own for longer, building their careers. A lot of people decided, well, they don't need to get married. They just want to live on their own. And then you've got, of course, people living longer, moving into smaller units, maybe downsizing. So there's lots of reasons why there's a big demand, and I think there always will be a demand. So that's good news. And since 2010, actually, 687,000 households have been helped through to get into home ownership through government schemes, and 69% of private renters and 63% of those living at home said they want to buy a house, but they couldn't do so because they couldn't save a big enough deposit. And it's a bit of a trap, isn't it? You're saving for a deposit, but in the meantime, houses are going up in price. So it can be difficult, especially if you're renting as well, and rents can be quite high. So the scheme is available through a range of flexible home ownership schemes, including Help to Buy, shared ownership, and first home schemes. And the figures show that the number of mortgage approvals since January, in January 2021, was actually 99,000. 99,000 mortgages were approved last January, 40% increase on the previous January before the pandemic started. So it's crazy figures. And so I think that's great news. The delivery of home is part of the government policy, and the government has helped thousands of people get into home ownership through the various schemes like Help to Buy and Right to Buy. But as I said, this scheme will apply to first-time buyers and second-time buyers. So the scheme is basically saying that the banks will be bailed out by the taxpayer, not necessarily the government. The government haven't got any money; they're using our money, if loans default and the lenders lose money. Now, in general, the higher the loan to value, which means the loan in relation to the value, the higher the loan to value, the higher the risk for lenders, obviously, because borrowers have less skin in the game and they can walk away from a property in the event of a property crash or negative equity. This happened in the past many times. You had a big property crash. People who'd bought properties with, say, 95 and 100% mortgages felt that, well, my house is not worth what I paid for it, so I might as well just go and give the keys back to the lender. So the lenders are stuck with it and then have to sell it at auction on a forced sale value for less than the loan that they've given on it. And this caused a lot of problems for lenders, and it partly caused the pullout of insurance companies who used to offer this scheme many years ago. They used to offer a mortgage guarantee scheme, but because of all these losses, the insurance company said, we like taking premiums, but we don't like losses. So they pulled out of that one. They decided they had enough of that game, so they're gonna leave and take their ball with them. But now the government have stepped in. But this is only a temporary scheme, by the way. So if your property is in negative equity, I don't think you really need to walk away. You could just carry on with it and until the value goes up, and that's what a lot of people did. But in the event that they walked away, the lenders were losing. So in other words, say if somebody bought to keep the maths simple, if somebody bought a house for £100,000, back at the end in the 90s, say, and they borrowed £95,000, and then interest rates shot up. There was a recession. People were out of work, and so on. They can't afford to pay the mortgage, and then they decided, well, it's not really worth keeping this property because now the value of this £100,000 house has gone down to £80,000. So that's a 20% drop, but they still owe £95,000, perhaps more with arrears. So when the lender goes to sell this property, they may get £80,000. They may at auction only get £75,000 or even £70,000 for that home, and therefore, if they get £70,000, the mortgage owed by the borrower was £95,000. So they're already 25,000 down. Plus there might be arrears. Plus there's costs. Plus there's surveyor's fees. There's auction fees. So they could easily be into £100,000 owed on a property that they've just sold for £70,000. Sometimes people even wreck the properties. However, the lenders can still come back after you for that money that's owed, because they say, well, we only got back £70,000. The debt now is £100,000 and growing because there's still interest on the debt. So we're going to go after you for an extra £30,000, and they can do that. And even though you might disappear, it might be years later, a knock comes on the door. Hello, I'm from XYZ debt collecting company on behalf of the Halifax lender, and you owed £30,000 to them 5 years ago. This has now risen to £40,000 with interest and costs, including my costs. So this can happen, and they can pursue you for years afterwards, and it could also stop you getting a mortgage because you've been repossessed, you still owe this money, you've got a judgment against you. They can even go for bankruptcy and just bankrupt you, perhaps in your absence. So anyway, this new mortgage guarantee scheme provides lenders with an option to and it gives borrowers the option to purchase to provide a guarantee so that borrowers can borrow on these high loan to values, which means the government will compensate the mortgage lender in the event of any net losses in the event of repossession. In other words, the guarantee applies down to 80% of the purchase price, and that guarantee is effectively being funded by taxpayers, and it's part of the overall multi-billion-pound spend by the government of our money for things like the furlough scheme, bounce-back loans, which are starting to become repayable right now, bounce-back loans, and other schemes to get the economy moving or to save the economy from complete collapse. The guarantee, by the way, will be valid for 7 years. After that, it's very unlikely that people would default on a mortgage after 7 years. But the scheme is temporary. It's designed to run from April to December 22, and at that time they're going to review it and see where it's going and whether it needs to be extended. And the government said that the scarcity of high loan to value is a response to the pandemic, so they're hoping that this will eventually work its way through and they won't need these high loan to value schemes. I've seen these schemes before. I've lived through days where there was 95% mortgages, 100% mortgages, 125% mortgages, and I've seen them come and go. I've seen different types of guarantee schemes on offer, and I've seen good times and bad times. So this scheme could actually result in pushing prices a little bit higher. Because if demand keeps soaring like this, then actually first-time buyers might find it more difficult to buy because prices keep going up. But that's another story. Also point out that the stamp duty holiday that's been running since last year is coming to a final end in June. That's prompting fears of a slowdown in the property market. But I think this 95% might give it another kick-start, which is what the government wants. Because the mortgage market and the housing market is very important to the economy as a whole. Because when that sort of comes to a halt, everything stops, like building work stops, people stop spending money on home improvements. It affects tens and thousands and maybe hundreds of thousands of jobs in the market. So the government want this to keep going. They want banks to be out there lending. They want people to be out there spending on home improvements, on furniture, on carpets and curtains and all these sorts of things. And that's part of the housing market. Our economy is very much driven by consumer demand, and housing is one of these things. So they need confidence in the economy, confidence in the housing market to keep it all the balls in the air and keep everything going. So anyway, that's the news. 95% mortgages available. So go for it if you're in that position. Personally, I'm not buying anything at the moment. I'm holding back until after June because I think, as I said in an article the other day, the people are spending far more on a property than they should do. They might be buying a property for 50,000 more than it was last year to save £5,000 or £10,000 on stamp duty. It's a bit of a false economy in most cases, I think. And there are parts of the country where prices are going up, even though stamp duty hardly affects it. Stamp duty really starts to kick in after 500,000 in most cases. Otherwise, it's a fairly small amount to pay. So there you go. That's it. Another offer here I've got for you today is if you want to get online, if you want to get your property business or any other business that online, or you want to start selling online, have a look at the link there because there's a company called Groove that will give you a free website, no credit card required. You can sign up for an account and build your own website from a series of templates. And that's very useful if you want to get your business or just get yourself online. Perhaps you've been furloughed, perhaps you've been laid off, or you're worried about your job, or you're not earning enough money and you want to earn a bit more. This is the way to go. Get yourself online. It could be you're in the property business and you're looking to source property buyers, or you're a property sourcer. This is a way to build a funnel or a website for free using this scheme. So have a look at that link there, and please feel free to click it. And you don't need to put your credit card in to get a free account. So thanks very much for listening. I'll be with you again soon. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. Thanks very much. Bye for now. I'd just like to thank everybody on, just one final thing, thank everybody on Facebook Live for tuning in. Always great to see you. And please keep those comments coming, won't you? Even if you don't agree with what I'm saying, because it always gives me good feedback to know that I'm moving in the right direction for you. So thanks for everyone who tuned in. Please share this post, like it if you can. It'll be great to hear from you. Thanks very much, and bye for now.